Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's have a look on the Bitcoin market. So here we keep going with the weekly pattern that we have. Actually, we talked about the double repo pattern. It has confirmed now. So you can see that the 3x3 moving average accurately envelops the price shape, which is very typical for performance of the double repo pattern. So currently I have no questions to the current picture on the weekly chart. So previously we already talked about the possible tricks around it. So it might be if it turns to failure and market still will show some jump here, and we will get double repo failure instead. So it could start looking like the flag pattern on the weekly and monthly chart, suggesting further upward continuation. But for now, when it hasn't happened, currently this pattern tells that on the weekly chart we have the bearish context. Minimum target of this pattern stands around 81. So this is 50% support on the whole thrusting action of the double repo. It's minimum target. So here we do not have any changes actually. On the daily chart, our grabber still stands in place, but performance on the recent week was really very slow. So you can see that in recent few sessions we've got just minor downside action here. And information that actually we are interested in stand mostly on the intraday charts. On the daily chart I do not see something really new. So here major conclusion that we could make currently is based on the 4-hour time frame chart and hourly chart. So returning back to our picture on the 4-hour time frame. Previously we said that we tied our potential target, and now considering only one or two area as a potential destination point because of the weekly pattern. The thing that I do not like here is that once market has reached some 618 support and this retracement, it can't get started the upward action. So it stands too long in a tight range without any continuation, especially when you can see the previous momentum that we've got on this kind of the engulfing pattern, right? So we have 3 bars to the upside, and then you can see just multiple bars to the sideways. This is not a good sign for the bullish context. So the thrusting action here should not be too fast compared to retracement late, or better to say retracement should not be so long. It should be much faster while we don't have it. That's what I do not like in the current setup. So personally, I do not want to take the long position based on this background, and I prefer to wait for a bounce and then make the decision whether the double repo will still be valid, and possible decision on taking the short position. At the same time, if you still see bullish signs here and you would like to take make an attempt to take it in long side, here's the same moments that might help you. First of all, on the fall time frame chart, you could recognize something that reminds head and shoulders pattern, right? So that might be treated as a shoulder, right? Some head and another shoulder. It tells you that at this point where market stands right now, actually this is the point for decision making. Because if market starts dropping lower, moving back to the C point, that obviously will be the bearish sign suggesting the breakout, and potentially here we could even get some downside butterflies easily. So it means that if market in general will start upward action at all, it should do this right from this point. So these moments I call as a culmination points on the market. They do not give you advantage, they do not guarantee you success, but this is the point where your risk-reward ratio will be maximum. It's optimal, where you get minimum risk, and it's the last level, last point where the bullish context holds. On the hourly chart, This type of action looks a bit different. So here it remains head and shoulders, but on the hourly chart we have some kind of the cap performance. In general, this is mostly the same. This is just explains the choppiness. If we have less choppy action, we have the head and shoulders. For this a bit more choppy structure, we are getting the cup. But both of them suggest the same background. And this is the background for considering taking a long position if you would like to. So your stop probably has to be below these lows. Or if you do not have a lot of funds here, you could try to just build here some fib levels and place it slightly, some in between the lows and the current point. Because if market starts falling, it already will be the sign that probably these lows will be taken out. So from that standpoint, you do not need actually any reasons to risk too much for this current setup. But as I said, based on the performance on the daily chart and the fact that market stands too long in flat session after the rally, this is bearish sign, and that holds me away from aside from the taking long position for now. So that in towards what we have as a bottom line. Bearish pattern on the weekly is still valid. That's why our trading plan with this pattern stands the same. We are watching for upward potential bounce to consider possible taking short positions. Supposedly it should be somewhere around 101, 102 area. If you still would like to take a long position with the possible bounce to the upside, that's the point that you have to make the decision. All about the risks and where you could place your stops we already discussed. So that's all for now. Let's see what will happen.